Hey, hello everyone. Welcome to our Mastering Moving Averages special event. It's a pleasure to have all of you here with us today to join our webinar. Great to have you. And my name is Stan Heller. I'm consultant for VectorVest Canada. I'll be your presenter today. And I'm quite excited about this presentation always because it's going to involve teaching you one of my most favorite strategies, the EMA squeeze, which is a moving average strategy that uses three moving averages, and I think you're going to love it. So looking forward to going through that with you. Hopefully you can hear me okay. It'd be great if you would just let me know where you're tuning in from, and if there's anything specific that you hope to gain from today, just chat it in and we'll do our best to answer your questions as we go through. But great to have you with us. I do have with me in the background of GoToWebinar and the YouTube channel. Wonderful to have you on YouTube with us. And Ray Clark, our Vice President, Educational Services, is going to be monitoring the chat in both areas. And if you've got a question that needs answering that I might miss as we're going through, Ray will do his best to answer that for you. So can you let me know in the chat that you can hear me okay and that we're ready to go? I'm ready to fire off if you can hear me. And I'm doing a test. Can you hear me, anyone? Test. Okay. Sure you can hear me. Microphone, let me make sure. Test. Checking. There we go. I think you can hear me now. Okay. If you could just let me know that you can hear me and where you're tuning in from, everyone, I would really appreciate it. We are getting started, and I think we've got the sound going now. So if you can let me know that you can hear me, that would be great. And let me know where you're tuning in from as well. Anyone chatting in? All right, Ray, I got to ask if you can hear me okay. Oh, there we go. All good in Stafford. Okay, starting to come in. Terrence, Richard, Glenn, thank you so much. Ken from Baltimore, that's awesome. Yeah, looks great. And Chris from Canada, so we've got a good international flavor. We have Dese from London, UK, so everything is good. So let's get going. Thank you so much, everyone. Appreciate that feedback. Always want to make sure you can hear me okay. Yeah, and Richard is saying, is anyone there? Yep, it's Stan Heller with you from VectorVest Canada. So I'm broadcasting from Lethbridge, Alberta. Great to have you with us. I'm going to go to this screen because this is our GoToWebinar platform. And if you have a question, just chat it in here, type it in. Most of you are seeing that and doing that already, so that's all good. Once we get going, this panel should close up and give you a little strip like this. So it gives you more screen space, and you can actually hold your mouse down up at the top and it'll allow you to move it off to the screen, and you click on that orange arrow to open it up again. So it'll give you more screen space that way as well. And if you're not hearing me, it looks like most people can. So if one person can hear me, everybody can hear me. So just make sure your speakers are turned up. That's going to help you. Make sure you can hear okay. And if you do lose sound or visual as we go through the webinar, the best thing to do is just log out and log back in. There's not much that we can help you with there. So Roger, I can see your test. I'm not sure if you can hear me okay, but if you, you're muted. So attendees do not have audio to our side, but you should be able to hear what we're saying to you. So all is good. All right, and we've got a lot of content, including the EMA squeeze strategy, the rules for buying and selling, So there's a lot of content today, and so we will give you a copy of the slides. If you're listening on YouTube, you may have to email myself. I'll give you my email address at the end of the presentation here and ask for a copy of the slides. For those of you attending on GoToWebinar, the slides will be in your handout section. I guess I should say, if you stick with me right to the end, the slides will be in your handout section. But because I'm not a real techie, I put the slides in there already. So you should see them in the file called the handout section. And I think that'll help you a lot once you sort of go back and review and want to set up maybe a search or set up your graph. It'll help you a lot. All right, so just some things that we'll cover, some key concepts, but before we do, I do want to let you know that we are relaunching our Mastering Moving Average course, starting with a live training session on September 13th. The course lessons have all been recorded, so if you decide to sign up today or tomorrow, you will have access to all the recorded lessons. And then as we go forward for 6 straight weeks, we'll have a live mastery class where we review the lessons sort of in order and then finish off with a bonus lesson. So 7 full weeks you'll have as well. All right, well, let's talk about some key concepts about moving averages and why they're so important. How many of you right now use moving averages already? I'd like to know, just if you want to just chat at the end, let us know if you're using moving averages, and maybe you've got a favorite moving average, or maybe 2 moving averages that you use for crossovers and that sort of thing. But I think if you're like me, what you love about moving averages, they just really remove the noise of all that, whether it's candlesticks or open, high, low, close. You tend to get a lot of movement up and down, and sometimes it can be hard to discern the actual trend of the overall price direction, the true price direction. And moving averages just remove that noise and define that trend to help us predict whether the stock is going to continue to move up or down in the direction that it's already shown you that it's moving. It could be moving sideways as well. Richard says, yes, I use them, and that's great. Glad to hear that. And Ken, I do. And Bernard, yes. So that's great. So you're already moving them. And today you're going to learn about the EMA squeeze and how you can combine really 4 moving averages to really have something special for determining price trend. So what we're going to cover 5 key ways that you can use moving averages. And then we'll go into the EMA squeeze, a complete trading system, the long side of the EMA squeeze. We do teach a shorting side of the EMA squeeze in the Mastering Moving Averages course, but what you'll learn today is a complete trading system to pinpoint high probability buy and sell signals to trade stocks and ETFs long. All right, so I hope you're excited about that. I know we've had great success with this EMA squeeze, and I think you're going to love it as well. So first of all, why are moving averages so important? Again, they smooth that price action. And just to let you know that moving averages are a powerful technical tool on their own, but they also form the basis for other technical indicators such as Bollinger Bands, stochastics, MACD. And of course, you can use moving averages when price crosses above or below a moving average. That can signal an entry or an exit. You can have moving average crossovers, for example, where the crossover signals an entry or an exit. And something that we emphasize in the Mastering Moving Average course that I know was new to me several years ago, and now I use it all the time, but that is the slope of the moving average and how critical that slope is to determine the strength or the weakness of that moving average that you're using. So the slope is going to be really, really important, okay? So there's three moving averages at least that we're mostly familiar with. Three are carried in your VectorVest software. We're going to talk today about two of them, two types of moving averages that are used in the EMA squeeze setup. And it's the simple moving average and the exponential moving average. So traders with a short-term perspective or goal, such as swing traders, they tend to prefer the exponential moving averages, and that's what we're going to use with the EMA squeeze primarily. The EMAs react faster to price changes, so there's less lag. And moving averages, you may be aware, they are lagging indicators. Price volume can be leading indicators. Well, moving averages, because there's a look back period, they are lagging indicators. But again, they do smooth out that price trend and show the true direction. And in the little chart that you'll see on the screen, we see a simple moving average of 13, a 13 trading day look back in red, and then the exponential moving average, the same 13 period look back, but it does give more weight to the most recent trading days, and it does track or react to price much more quickly. And you can see that in the lines below where we have the EMA in blue and the simple moving average in red. And you'll notice as price starts to make its move, the EMA starts to track it much more quickly and begins to hug price on the way up. And over here you can see the EMA was starting to move up as price was moving up, and then it quickly reversed when we got those two big red candles. So the EMA is just a little faster, and I like to use the EMAs for my swing trading. If I'm looking at a longer look back period, say even the 20 to 50 to 150, 100, 200, then I'm using the simple moving average, and it works quite well. And Barra's a moving average is simply, for example, a simple moving average. We've got a 13-day look back period. It's the sum of the prices at the close of each day for that 13-day period divided by the number of days. So a very simple calculation for that moving average. And again, the EMA gives a little more weighting, a little different calculation to allow it to react more quickly to price, particularly valuable in short-term trading. Okay? And you can see the smoothing of the price down below. All right, so I want to talk about 5 key ways to use moving averages, and we go into more detail in the moving average course, the Mastering Moving Average course. But the first one is to define and invest with the trend, up or down. And again, that slope of the moving average is letting you know how strong is the trend. So it's giving us that true direction so that we can invest with the trend. If we see that intermediate or longer term trend is sloping to the downside, we know that it's maybe not the best time to be buying long positions. We want to wait for those moving averages to start moving to the upside. We can identify buy and sell signals, knowing when it's the safest time to buy and when to consider selling. If we see a fast moving average cross above a slower moving average, the 3 EMA, for example, crossing above the 8 EMA, then that's a strong buy signal, especially if the underlying prevailing trend is also starting to move higher. So it gives us a clear buy and sell signals. It helps us determine broad market conditions. Is there more buying pressure or selling pressure? Which way are those moving averages going, up or down or sideways? Is the market healthy and in an uptrend, or is it in a downtrend? And again, that slope of the moving averages is telling us how strong the trend is. We have quite a few Canadian attendees today, and you'll know in Canada, our market timing graph uses a 65 period moving average of price as one of the criteria for a confirmed up or a confirmed down call. It's that important to us. And then, is the stock near support or resistance? And moving averages give us a little different look on support and resistance. I think we're all quite familiar with the horizontal support and resistance lines, and moving averages can track that support and resistance to the upside or the downside. So for example, if you have a 50 period moving average that's moving up and price is above it but comes back down, pulls back down, and then bounces off of that 50 period moving average, well, it's finding support at the 50 period moving average. And oftentimes you will see that it finds that support 3, 4, or even 5 times on the way up. So it's an excellent indicator of support and resistance. Just got to fix something here in my, there we go. Okay. All right, fix it in my GoToWebinar. The other thing about moving averages, it lets us know when price is extended. I'm going to give you a key teaching point from the Mastering Moving Average course. And maybe some of you, you've used moving averages and you're aware of it. But when you can buy a stock, when price is near a support moving average and not pull it, it hasn't pulled away and is not too much higher than that moving average, that gives you a better chance for success with that trade. It gives you a margin of safety. As long as the price is moving up off of that support line, the moving average, and it's not too far above it, you're in a better position than if you wait until price is well above the moving average and then you decide to buy. That's kind of setting yourself up for a little bit of failure. Okay? Yeah, Gary, you've got it. 50 moving average crossover over the 200. The golden cross, that's definitely one crossover that you might be looking for if you're a longer term investor. You would use a shorter moving average crossover for near term trends. And in the EMA squeeze, we're going to be using a 5, 8, and 13 EMA exponential moving average. So you'll learn about that. All right. So price tends to revert back to its mean average. And so you want to, if you see prices pull too far away from a moving average, maybe the 20 or the 50 or the 100, then you know it's the likely next move is to pull back closer to that moving average. So it can keep you from making an ill-advised trade. It could go higher. Obviously, price could go higher for a period of time, but eventually, if it's too far extended, it's going to pull back. All right, so here's some examples, and I'm going to go into the program a little bit later once we get into our discussion about the EMA squeeze strategy. But this is a 3-year daily price graph. The stock really doesn't matter. And we've got our short-term moving averages, the 3 and 8. Those are exponential, green and red, the short-term trend indicators for us. And then we move into a medium trend, the 20 period moving average in brown. The institutional, I call it the institutional support resistance of a 50 moving average because there are mutual fund managers, for example, that won't be buying any stocks unless price is trading above the 50 moving average or in some cases above the 200 moving average. And when price comes down to those moving averages, quite often you will see volume increase as the institutions are trying to push up the price to keep it above the selected moving average. And oftentimes it is the 200, but it can also be the 50, and you see that in blue here. And if we're looking for entry opportunities, when we get the short-term moving average crossovers, if we're in a prevailing uptrend, you can make that trade more confidently when the 3 crosses the 8, when the prevailing trend is to the upside. And I found this graphic because when we first taught the Mastering Moving Average course, and we've done it a few times since, I would let people know that the ideal moving average is trading up at about a 45-degree angle, 35 to 45 degrees. And everyone kept asking, well, what is it? What does a 45-degree angle look like? Well, it looks like the 2 on a clock. Now, I made the mistake of finding a clock that says 10 after 10, but just look at the 2. When the moving average is heading up toward the 2, you know that you're in a nice steady uptrend. If it's too close to the 12, then you know you're in more of a parabolic uptrend, and again, that mean reversion, it's likely to pull back. Okay, so pointing toward 2 o'clock in an uptrending price action, that's ideal. All right. And then here is a prevailing downtrend. So now your longer moving averages are starting to roll over. Here's the 50 in blue. And now we've got a downtrend, and even the 100 and 200 are starting to, well, certainly the 100 is flattening out a little bit. But when you see that happening, and even if you've got a crossover such as we do here, right on this area, you can stay away from taking that trade because you don't want to take a trade when the overall trend is moving to the downside. Once we hit that 200 and start to bounce off it, then we can start to look more to an upside trade. Okay. So in this case, we see that the moving averages are pointing toward the 4 on the clock, and at least I've got a 10 to 4 on this one. It's not exactly 4 o'clock, but it's pointing toward the 4. Then we know we're in a fairly steady, even price decline. And of course, when your moving averages start to point toward the 6 on the clock, well, then you know you're possibly getting extended away from the moving averages, and you're likely to move back up from there. Okay. Everybody all good? All right. So as I mentioned, we have our Mastering Moving Averages, sort of a new class. It's not really the new course, it's a new class. The lessons have been pre-recorded, so as soon as you sign up, you have access to those lessons. And then we have our 6 live mastery classes to review the material, introduce some new material, and answer your questions. And then we have a bonus live class as well. But I wanted to read you a nice note I got from Bob at one of our previous courses or lessons. And he said, Stan, you're a very good teacher. I like your style. But most of all, I appreciate the simplicity of your explanations of the strategies. So our strategies, and you'll get 6 or 7 clear strategies that are designed to help you with short-term trading in some cases, and then long-term trading with some other strategies that you'll learn as well. And the most important part for me is that Bob understood very clearly the explanation, so that was great. He said, I'm more impressed every day with your instruction and content of this series of strategies and systems. Each is very good. In certain circumstances, I can see myself using most of them depending on the portfolio I am working with. You may have a different strategy for your swing trading, but a totally different strategy using different moving averages for your long-term retirement portfolio, for example. So we give you both scenarios. I'm having just a little challenge with my GoToWebinar, just looking for any questions here. Looks like Ray is doing a great job of answering your questions. Uh, Ken is asking about the Heikin-Ashi candles with the moving averages, and I do love the Heikin-Ashi. We don't offer that in VectorVest at this time. I hope we'll be offering it soon. It's just another way to smooth price action. It's a different way of calculating the open, high, low, close. So it does smooth out price action just a little bit more, and it's certainly an improvement request that our development team is aware of. All right, well, I want to get into teaching you the EMA squeeze. I think it's such a valuable strategy. I use it all the time. Personally, I use it in conjunction with another strategy that you might be familiar with. It's the near perfect indicator, and we've actually added the near perfect indicator into our live mastery class. When we teach the EMA squeeze mastery, we'll also go into the near perfect indicator. They actually work extremely well together, so you'll be learning about about both strategies in this Mastering Moving Averages course. But this particular strategy, the EMA squeeze, uses the 5, 8, and 13 exponential moving averages. And it's really a swing trading strategy. You can use it with weekly graphs, and oftentimes the weekly gives you the confirmation of the price direction and trend with these moving averages. I use it for swing trading for daily on the daily charts, but I'll use the weekly for confirmation. And I know we have students who have let me know that they use it for day trading as well on intraday charts, and that's great. That's not my cup of tea, but if you want to do that, it works on all time frames. So what we're looking for is a pullback or quiet period where the three moving averages, the 5, 8, and 13, have come together, they've squeezed together, and then they start to pull apart and fan out. And what we're looking for is a fanning out to the upside. So they kind of got a smooth price action. Maybe it's starting to go a little bit sideways, or at least the averages are coming together, and then they start to fan out, the 5 pulling away from the 8, and the 8 pulling away from the 13. And once again, we use the slope of the three moving averages after this squeeze. If the slope is starting to move strongly to the upside to 2 o'clock or even 1 o'clock, then you know you've got a strong trend as well. And so the trend is most likely to continue. So even though we may have the 5 above the 8 and the 8 above the 13, we still want to see that upward momentum in those moving averages. And I'll show you some examples as we get going. A strong upward move increases the probability of a successful trade. So, as I mentioned, our strategies will have specific buy rules and sell rules, and of course you can modify them depending on market conditions. You know, you might have a little more a looser stop or more latitude when the market is moving higher, but if the market is losing momentum and starting to fall, and VectorVest is starting to exercise caution, then you can tighten up a little bit on when you get out. And I'll show you some examples where you can do that with this strategy. But I think you want to follow the rules as closely as possible. And what we're looking for is the 5 EMA greater than the 8 EMA, and the 8 EMA is greater than the 13. So 5 above the 8 above the 13 before we can go ahead and make a purchase. Here we use the simple moving average with this strategy because, like the institutions, or many of the institutions, we want to make sure price is above the 50 simple moving average before we buy. The relative timing indicator in VectorVest, it's one of the premium indicators. You won't find a better one for identifying trend and direction. And so we've incorporated a minimum 3-day trend with the RT, or relative timing. So RT is higher today than it was 3 days ago. And if you've been with VectorVest for any amount of time, I'm sure you can already see, oh, I can create a search that meets all of these criteria, and it's going to make it easier to find my trade candidates. And I'm going to show you one as we go forward. The market to be in an uptrend. Now the DEW timing signal is sort of the VectorVest Goldilocks timing signal, but there's the primary wave up, the green light buyer signal, when the buy-sell ratio is at historical lows, well under 20, for example, whether you're in Canada, US, or any of our other countries, that often shows that reversion to the mean, where the mean, the buy-sell ratios come down so low that it often results in an explosive move to the upside. So we use that kind of judgment in identifying market direction as well. But we want to make sure it's in an uptrend. And then we have a sell rule, our line in the sand, and that's when the 5 EMA closes below both the 8 EMA and the 13 EMA. So when that's happening, the trend has been broken, and we know we have a potential substantial loss. And our whole strategy with the EMA squeeze is to allow ourselves to take advantage of long trends to the upside and to get out with maybe small losses if the trend reverses quickly on us. Everybody good so far? I see Ray is answering a lot of questions. That's great. All right. So here's what it looks like, and I've got two little mini graphs here. We have the 50 period moving average with our pink line. So that's the 50. And then we have the 5 in green, and I always suggest you use the same color scheme in all your graphs, but the 5, in other words, the fast moving average is going to be in green. We have the 8, that medium moving average, in red, and we have the 13 EMA in blue. So green, red, blue, 5, 8, 13 EMAs. And here, prices come down pretty strongly, starts to move back up, and then we have a consolidation, and we see our EMA squeeze right here. And from here, price continues to move higher, and it's moving up. At this candle, we see price moves above the 50 period moving average. Now we've already seen the fanning out of the 5, 8, and 13, so a strong trend to the upside is already building. We have to wait until price closes above the 50 simple moving average. It does that right here, and we get ready to buy at the next day's open price. So we're ready to buy at this open, and the fanning out is now a very steady uptrend with our 3 EMAs. We're at the right, we can see in the same layout or same symbol that the relative timing is higher than it was 3 days ago. It's starting to rise pretty steadily. And again, price is closed above the 50 simple moving average, so we've got to buy. Sell rules, the 5 closes below both the 8 and the 13. That's our absolute must sell signal so that we can prevent a substantial loss. You can either have a big loss or a small loss, and we want to keep all our losses small. And when we get this crossover, we've got to get out. There are other warning signs that you can adhere to. Obviously, if the market turns bearish very suddenly, that can cause you to start thinking about taking some profit. When the price and relative timing, the RT, start to diverge where price is still going up, but the RT is hitting a lower high, that can be an early warning. When the bands really start to get wide, that can be a bit of a warning sign as well. The 5 is getting extended from the 50, and so that mean reversion is starting to occur with that price. And then there's our absolute must sell. Okay. All right. So here's an example using Mesa Air Group. Here you can see price has come down below the 50 period moving average. And then we do get our squeeze where the 3 EMAs, even before they cross, we have a bit of a quiet period where the EMAs are coming together and then they squeeze. And out of that squeeze, just like holding a ball or a balloon underwater, we get that squeeze and then it explodes to the upside. And on this candle, we actually have price above the 50, has crossed above the 50 simple moving average in orange. That's the orange line. However, we don't have really strong fanning out of the 3 EMAs. It starts to happen on this candle. We see the fanning out of the 5, 8, and 13. And then price opens higher the next day and the EMAs are widening. And so we can take our entry at that time. And as we move up, we can see that price does pull back. And with a bearish harami here and then more downside pressure, you might be scared out of that position. How many of you think that would happen to you? You've got a winning trade at this point, but now you're seeing the bearish harami, one black crow candle here, so a couple of bearish candles. On this green candle, price actually closed lower than the open. So you might be scared out of that position, right? But the 5 and the 8 are both well above the 13 EMA in blue. So you stay into that position. We get another breakdown of price here. And eventually the 5 just barely crosses below the 13 EMA and we sell. So we had a buy on January 3rd of $1.54, and we have a sell on February 24th of this year at 309. That's 100% gain. And so we've been able to let our winner run. RT was strong all the way along. Volume, you notice the volume increase at the time of purchase. That's a really strong confirmation that the institutional buyers are stepping in and driving that price higher. So you've got a really nice movement on this example. Now this is another quiet period. The 5 did cross below the 13 EMAs here, and then it started to squeeze together, and we have another upside movement here, and possibly have taken another trade here. The 50 moving average is already moving higher, so we could have taken another trade, but it would have been a short-lived trade and would have resulted in a very small gain or even possibly a loss because of these big red candles. All right. So here's another example. This is from Canada. That one's from the US market. So here's the Canadian market, and these are the kind of chart patterns that you absolutely love. Here we have our price coming below the 50 period moving average. And then we have our squeezing together over here in January. And price eventually does climb above the 50 simple moving average. And we start to see some fanning out of the 3 EMAs. So we have a buy signal on January 10th of $22. RT moving up over the 3 days, and it is well above as well. So that's another confirmation of the trend. And then the 3 EMAs are aligned and move up together toward 2 o'clock. Then we have a little bit of a pullback, but once again, the 5 does not cross below the 13, so we're able to stay in that trend. This is an opportunity to add to your position or buy a new position if you're not in it already. Back here, we've looked at the crossover of price above the 50, signaling a possible entry. But this is a possible entry where price is already above the 50, but it's had a bit of a consolidation or pullback and now is rising again. And our 3 EMAs are starting to fan out. So we have another entry opportunity. So if you're someone that likes to scale into your positions, buying a third here and a third as price starts to prove itself, that's your second third. Here's another contraction where the 5 does not cross below the 13, but you've got a nice squeeze and then the fanning out, and you add your last position here, and now you've got a full position and price continues to go higher. Here again, you might have been scared out of your position, and you certainly could be forgiven if you sold some of your shares here. If not all, you've got a nice profit. But the 5 staying above the 13 keeps you in the trade all the way to here. And then you sell, and you've got a very substantial gain of 150%. Now, this is a terrific example. These don't come along all the time, but I'm going to go into the program and show you that they do happen frequently enough. So here's CDNS, Cadence, computer graphics, and here we're below the 50 period moving average with price. We get quite a substantial gap up, and so price is moving up. We do get the fanning out of our 3 moving averages, so we could make the purchase here. It meets the rules, right? But we are starting to get extended away from the 50 simple moving average. So we might have stayed out of that trade, but we could certainly take the trade. If we did, we would have a small loss when the 5 finally crossed below the 13 EMA here. So you'll hear this often in the recorded lessons of the course. Not every trade is going to be a winner. And what we do hope is that we keep our losses fairly small. This was about a $2 loss on a $160 stock. And so we can absorb that, and then we get another opportunity on the buy side here, and we get a really good rally on that one, about a 25% gain. All right, so here's another one. Again, in this case, we're above the 50 period moving average with price already, but we get our EMA squeeze right here, so we're into the trade. We get a little bit of a pullback, but the 5 doesn't cross below the 13, so we're able to stay in the trade, and look at that thing go from there. And you know, we all need 2, 3, 4 big winners every year to really make our portfolio, and the EMA squeeze delivers for us. Okay? All right. So I'm going to go into the program and just show you how we can find these trades. You know, that is the kind of the hardest part, is to find the trades as they're setting up. But let's just go into the US side. I'll go to the stock viewer. So one way is to just simply go to the stock viewer, and you can just start to look at the top VST stocks. And I'm going to do a little bit of historical look back here as well, just because it's helpful, I guess, with these stocks to see when they broke out. And I want to make sure I'm just looking at the EMA squeeze layout, so I just have to take off a couple of moving averages here. So now we're on to the EMA squeeze layout. So this is our EMA squeeze layout, and of course, once you've set it up in your software, we don't pre-set up the layouts for you, but we show you how to set it up with the color schemes. I'm using a white background for presentation. You might be on the black background and you need to use different colors. But once you've set it up, you go to Graph Layouts, Save Modified Layouts, and then just add the layout give it a name, EMA squeeze, and you're all set. It'll be there for you going forward with the colors all in place. All right, so here's sterling. When would you have had a chance to get in? Well, we had price coming down over here. We had the 5 crossing below the 8 and the 13 moving averages here. Price is below the 50 moving average. Started to come back up to the 50, didn't get above it. Here, price started to pull together. Notice we've got our quiet period right here, a little bit of a squeeze, and then price closes above the 50 period moving average on May 2nd. Now, it did close quite a bit above the 50, so you need to look for follow through to make sure that you're comfortable with this trade. We do see the RT starting to rally and go higher, and so we'd be possibly entering a position the very next day. We have a buy rating from VectorVest as well, and we're in at about $41.14, something in there, and then we can move forward. So we're at 41 basically, and now we're at 45. We're starting to see a little bit of weakness, possibly an opportunity to add shares here. We have another little bit of a squeeze here. The 5 never crossed below the 13, so we're staying in the trade, but you definitely have another opportunity to add shares either on this candle or certainly this one when you see the fanning out of our 3 moving averages. And off we go. Here we're starting to see 4 red candles. We're still not out of the trade because the 5 is still above the 13, but we're getting close. We stay in, and we're forward with another rally to the upside. So we've gone from 41 to 77. Yeah, Chris says nice. All right. So we show you this graph layout. Here's another one that's setting up a little bit right now. Why might I not want to take this trade? Just if I look at the right edge, what might cause me to say, you know, I better wait a little bit. And by the way, let's see what signal we're in right now. So today we got a primary wave down. Does anybody want to venture a comment of why I might not take this trade, even though price has been coming up? We had a down day just today, but why might I not want to take this trade? Anybody? Yeah, Barra says, well, the DEW is down, so that's very possible, isn't it? You don't want to go against a general market trend. The DEW is still very much down. Ken says the price is way above the 50. That's a really good observation, Ken. We're quite extended from the 50, so there's a little more risk with that trade right now. Chris says the RT is trending down. Yeah, it was trending down, and it's really just kind of flat going sideways. It's definitely not exploding to the upside. There's one day where it's up. So, and then Sarah says volume on this day is not high enough. So there's a few good reasons not to take that trade. But was there a good time to take it? What about back here when price was below the 50, crossed above the 50, still fairly close to the 50 at that point, and then we get our entry here with the 3 EMAs fanning out, and it stayed above the 50 from $25. Even here, it's above the 50. So now we're at $44. It's not quite a double, but it's pretty darn close. Here's another one. PFIE. Real nice long squeeze here. RT rising beautifully, fanning out of the 3 EMAs. We're into the trade, and then we get scared because we've got 4 red candles almost right away. But notice the 5 is still above the 13 EMA. It has crossed below the 8, but it continues to go up. Continues to go up, and we get a very nice trade from $1.31 to 220. So that's a really nice trade. On a percent basis, that's huge. All right, so that's just some examples, but it does take some time to go through the graphs and find the opportunities, maybe put them in a watch list and identify them from there. But in the course, we teach you, got some funny things showing up on my screen here. I'm not sure why that is, but let me just see if it changes here. No, it's going to stay there. Okay. So what you'll learn is a search that sets out the rules of the strategy. We have the 5 crossing above the 8 EMA in the past 5 days, both averages moving up. The 8 is crossed above the 13 EMA in the past 5 days, both averages moving up. We've got the RT higher today than it was 3 days ago. Stock price greater than $1, volume greater than average volume greater than 100,000 shares, and price. This MA1 is a proxy for price. If you've got a 1-day moving average at the close, that's the price, and it's currently above the 50 moving average, the simple moving average, just for 1 day. So if I go ahead and run that, and I was running it on January 3rd, real strong uptrend, but let's run it today at the close and just see if we have any stocks that meet the criteria. We've got some. And so now you can just go through and still do a bit of cherry picking. Maybe go to a 3-month graph and start with the price off the graph. And so now we've seen that the moving averages were coming down. What did they find here? Support at the 50. So Vista's starting to move up. If I look a little bit further back, it's been in a pretty long-term uptrend with the 3 moving averages staying above the 50 simple moving average, but there has been some whipsaws, a pretty good rally here from $21, $22 all the way to 25, so that's been a good rally. This one is not quite ready because it's not fanning out just yet. It's a little bit close here, so this is another one that would be great for the watch list. And now we're starting to see some fanning out. We're quite a ways away from the 50 moving average. Obviously a better buy back here, but it's got that potential. This one I really like. We just need price to be above the 50, and it is. And so we just need an up day to go ahead and take advantage of that as long as price stays above the 50. All right, so that's the search. That's just one of the searches that you will learn in the Mastering Moving Average course. If I go back to our slides, so the setup, it's the hardest, most time-consuming part. We do have the stock viewer, which is bringing those best VST stocks to the top, or you can sort by CI or whatever you like. And then you have your own watch lists. We've got premium pre-built watch lists, or you can create your own. And then we have Unisearch, very powerful search engine that allows you to find stocks that meet the rules very specifically. Okay, so RT is the relative timing indicator, Gary. It's the indicator that really helps you identify short-term price trend, momentum of that trend, and sort of the magnitude of the move. And then we use graph history to give you that confidence. And we've looked at quite a few graphs today, and I think you can see the outstanding potential of this strategy. So we've learned 5 key ways to use moving averages. We've learned the EMA squeeze trading system, the complete system. We've learned the buy and sell rules. If you want to learn more about moving averages, I really believe this is the most comprehensive course on moving averages that you will find anywhere. And I feel it's something that's going to help you with your VectorVest software to get more out of it. But you're going to learn about the VectorVest system, learn about understanding moving averages. This is my favorite strategy. It's trading with a single moving averages. It's just, if you're going to trade just one moving average on a crossover, this is it. But there's specific rules for when that crossover occurs and what you need to see happen. And it's very much like the EMA squeeze. You kind of want price to be hugging that moving average before you buy. Using moving averages as support and resistance, the EMA squeeze, and now we're adding the NPI, the near perfect indicator, as a lesson in the live mastery class of the EMA squeeze. They complement each other so well. Multiple moving average trading system. You'll learn how to use the GUPPY, the GMMA indicator. That involves 12 very specific moving averages, 6 that identify the trader's intentions, and 6 that identify the long-term investor. And when they're both moving up together, you've got yourself a winning trade. Dr. Barbara Starr, a technical writer and trader herself, gave us the surfing the reversal waves for short-term trades. We have the Midas touch system, both the long Midas touch and the swing trading system for Midas touch. And then we have our bonus trading system, the high-low moving average band. So tremendous amount of content. Barra, yes, the institutions love the 50-day moving average. Often it is one of their rules. They don't buy stocks that are not above the 50-period moving average. Some institutions will have a rule about the 200 in the same way, but the 50 is probably more common. So with this new course, we're offering it at $295 USD today, and I'm sure it's going to go away pretty quickly after the webinar, because it is a webinar special to thank you for coming out today, and you'll learn all of those strategies. You get the recorded lessons right away as soon as you sign up, and then the live mastery classes start on September 13th. There's 6 mastery sessions and then 1 bonus session. For current subscribers, you get access for 70 days to the US Premium Real Time if you don't have it already, and Intraday Canada if you don't have it already. If you're not a subscriber and you want to join in, you get free access for 70 days to the VectorVest software, including US Real Time. That access includes for everyone the pro trader, so that you can do these technical searches, the crossover search that I just showed you, and other technical searches. There's about 35 in all, relating to MACD breakouts, stochastics, overbought, oversold searches, breaks above resistance, and so on. So you're getting an awful lot of extras for your participation in the course. And then something new that we're doing with this course is giving you access to 6 swing trading group coaching, so that you can put into practice some of these strategies that you'll learn in the course, because our swing trading instructors, Jerry and Steve and myself occasionally, will use these swing trading strategies from the MMA course during those coaching sessions. So you're getting quite a lot of value on that side of it as well. Here's the mastery class schedule. Everything is recorded. Even now, when you go to the recorded lessons, you'll notice that after a certain lesson, there will be a mastery class. For example, after lesson 1 and 2, there's already a recorded mastery session, but you're going to get a live session to answer your questions and add new content, look at more recent charts, and that'll happen starting September 13th, and it goes every Wednesday at 1 o'clock for the 7 mastery classes, which includes the bonus session. So there's the 10 full lessons. This is what it looks like in VectorVest University. I had a gentleman call me today who heard Jerry give us this presentation yesterday and signed up, and is wanting to get started, and so we just showed him again how to get started. He's got his emails, he's all ready to go. And the one thing you need to know is when you click on these arrows, it opens up the video recording and any slides and information that way. And we have quite a few recordings for the search setups that you'll be using as part of the course, walking you through step by step. It says what time and days are the 6 sessions? Well, there they are right there. 1 o'clock Eastern every Wednesday starting September 13th right through to October 18th. If you miss a lesson or miss a mastery class, Roger, it'll be recorded and it'll be in the VectorVest University the very next day. And if you have any questions during a lesson, you can email me at stan.heller@vectorvest.ca, and quite often I will answer you directly, but I'll also put it into the mastery class slides so that we answer the question for everybody, because your questions help everybody. There's homework assignments with virtually every lesson, I believe every lesson actually, and those are great to go through, and it just solidifies the learning. And then any mistakes or successes you're having, let us know. We're glad to pass those along to our students. So Rob O wrote, once again, thank you for a great presentation on the multiple moving averages. That's the guppy. And your Mastering Moving Averages course, as always, is well documented, has a wealth of information. I really like the 20 moving average channel search. That's one I love as well and use all the time. I think the MMA course should be a fundamental course for new and experienced VectorVest users. I think because it helps you so much with the navigation in VectorVest and the little tips and techniques for using the software. It has been very educational, and I look forward to using the setup searches of the program to advance my trading success. And then one more just from Warren G., who I've met several times, living close to us in Calgary. We're in Lethbridge, and they're just 2.5 hours away. Warren says, after taking the MMA course, I'm now able to better determine entry and exit points. My win-loss ratio following my old plan, in quotations, maybe wasn't such a great plan, resulted in 51% wins with very little monetary gain. If I would have followed the 20 moving average strategy, I would have had 75% winners and produced my largest portfolio gain. Using the EMA squeeze, I would have netted me 84% winners and the second largest portfolio gain. And the golden crossover would have resulted in 64% winning trades. It's a very simple strategy, and it actually would have resulted in the smallest of the three for the portfolio gains. But Warren said I would gladly have taken half the portfolio gains in any of the three above strategies. So it does work. It's going to give you a tremendous background and understanding of moving averages. Love to have you with us. If you have any questions, we're always available. jerryd@vectorvest.com, stan.heller@vectorvest.ca, and these are the support line numbers. And if you will go to www.vectorvest.com/moving average, and I can chat that in for you right now. Just have to click on it. VectorVest.com/MA, and that will take you to a screen to allow you to register for the course. And again, once you register, you have immediate access to the recorded lessons, the previous mastery classes from the last course that we launched, and then have the live masteries coming up. So, listen, it's been great to have you with me. Just in the chat, let me know if you've already signed up, or if you're thinking about signing up. If there's any last minute questions, please let me know. Bernard says, what is the CI? So if I go back, let's see, did I put it in the lesson? Okay, I think I've got it in the software. So the question was, well, what is the CI? The CI is the comfort index. It's a longer term indicator of price direction and momentum. So it really smooths out the trend. Um, so for example, if I go to the stock viewer and I look at sterling, which has a CI of 1.85 on a scale of 0 to 2, that is going to have a really smooth chart pattern over the recent time frame. Now I can put on a 5-year weekly, and we're still seeing a fairly resilient stock that has a fairly smooth price pattern all the way along. Um, Weekly graph, you would have had another EMA squeeze entry way back here in September of 2020, and that would have lasted till here, from $14 to $20 on a weekly graph. This is on a weekly graph, $32 to $60. Not quite getting an exit signal here, so you're staying in the trade, maybe an opportunity to buy more shares, especially once the RT got going here. And that's on a weekly graph. So you can do this on weekly or daily. I tend to use the daily, but the weekly is very effective as well. But that's the CI. Carrie says, is the lesson going to be emailed to us? Well, yes, you will receive an email, Carrie, with the recording. The slides you should pick up right now from the handout section. All right, so you don't miss out on that. I don't believe the slides are going out with the lesson. All right, and I'm just checking to see if there's any last minute questions. Okay, got Gary. Gary just got the slides. Awesome. All right. Sometimes at GoToWebinar they can be hidden a little bit, but you should see a section called handouts, and that's where the slides are. Well, folks, it's been wonderful to be able to present this to you. I hope you enjoyed it and got a lot out of it. How many of you think you'll start using the EMA squeeze in your trading just as soon as you have a chance to set it up in your VectorVest software? Just chat in why, if you like it and think you might be using it. I can guarantee you there will be another strategy that you'll think is even better. We often get asked the question, what's the best strategy? And it's a hard question to answer because depending on your portfolio goals and your investment style and how much time you have and market conditions, one strategy is going to be better than another. But Bernard says, yeah, gonna take advantage of the EMA squeeze. Thank you, Chris. Appreciate that. Well, listen, that's wonderful, folks. Wish you all the best for the last trading day tomorrow, and all the best for the weekend. And we'll look forward to seeing many of you on the course, I'm sure. And just go to that link in the chat, vectorvest.com/MA, and you're going to get the best price that we have available. It's essentially the same price as we offer to our elite subscribers, but it does go up after this webinar. I'm not sure if it'll be tonight or tomorrow. It goes up to the early bird price of $395 US, and then it goes up from there to the $595. So the earlier you get in on the course, the better. All right. So thank you again, everyone. There it is there, all the information. And you can call support for more details if you like, but I think you've got a lot. And again, thanks again for joining us. Look forward to seeing you again. Take care, everyone.